Look around your house. With a smart thermostat, video doorbell, or baby monitor, your digital footprint now extends directly into the physical world. Cybercriminals no longer have to attack your heavily defended laptop head-on. They look for the weakest link. By infiltrating a poorly secured smart plug, they can bypass your router's firewall and gain lateral access directly to your computer. The financial damage from these infiltrations is severe. If a hacker takes over an individual's financial accounts, the average victim loses roughly $12,000. And hackers specifically target those with accumulated wealth. Older populations are consistently the prime targets for the social engineering tactics and wire fraud schemes used to drain these accounts. This bar chart from the FBI's Internet Crime Complaint Center tracks total financial losses by age group. The bottom bar shows that victims aged 60 and over suffered an immense $4.8 billion in losses in a single year. The convenience of a connected home has exponentially increased your financial attack surface. A heavy deadbolt on your front door is useless against a digital threat bypassing your network. Many people assume their standard homeowner's insurance will step in to protect their bank accounts if their network gets hacked. A standard policy will cover the physical theft of a laptop. It might even cover basic, unauthorized credit card charges. But those fraud payouts are usually capped by a strict $500 sublimit. That leaves a massive gap. Standard policies actively exclude the damages caused by ransomware, social engineering wire fraud, and severe network breaches. To fill that gap, the insurance industry offers two very distinct add-ons: identity theft insurance and personal cyber insurance. If you confuse these two coverages, you will end up paying for a shield that cannot stop the specific digital weapons targeting your home. Identity theft insurance is typically a low-cost endorsement added to your homeowner's policy, running about $30 to $35 annually. Its primary function is to act as an administrative shield. It reimburses the out-of-pocket expenses you incur while trying to restore a stolen identity. Those expenses include fees for lawyers to navigate the credit bureaus, the cost of certified mail, and reimbursement for the wages you lose by taking time off work to make phone calls to creditors. Here is the critical limitation. Identity theft insurance does not reimburse the actual money stolen from your bank account. It also will not pay a single dollar toward the IT costs required to remove a virus from your computer. It pays for the exhausting paperwork and legal cleanup of a breach. It does not cover the digital payload or replace the stolen funds. Personal cyber insurance is a different product. It costs between $50 and $200 a year, depending on whether it is purchased as an endorsement or a standalone policy. This policy is designed to cover direct financial losses. If you are tricked into wiring money to a fraudulent account through a social engineering scam, this policy is built to reimburse those lost funds. It also covers digital extortion. If hackers lock your hard drive and demand a ransom to release your family photos or tax documents, this policy can reimburse the ransom payment. For your hardware, it pays through IT forensics experts to unbrick hijacked smart thermostats, security cameras, and laptops so you can safely use them again. There are strict trade-offs. Policyholders must pay deductibles, often between $500 and $1,000, before the coverage kicks in, and you are required to file the claim within a strict 60-day window. Personal cyber insurance is the only true financial safety net for a modern smart home. It is the sole mechanism available to replace stolen funds and repair a compromised digital ecosystem. Let's compare how these policies respond to a basic peril: credit card fraud. Standard homeowners, identity theft, and personal cyber policies all provide some level of protection here, though standard limits are low. If we look at ransomware and extortion, standard and identity theft policies fail completely. Personal cyber is the only policy that provides coverage. The same applies to device repair and data recovery. If your hardware is bricked, personal cyber is your only option for financial assistance. But no insurance policy replaces the need for mandatory cyber hygiene. Implement multi-factor authentication on your accounts, use a dedicated password manager, and update firmware on connected devices. Insurance is purely reactive. It reimburses you after the traumatic invasion of your privacy. Active cyber hygiene is the only true way to prevent the attack from succeeding in the first place. To choose the right coverage, you need to match the policy to your specific digital footprint and assets. Consider the budget-conscious minimalist. This is someone with a dumb home, very few connected devices, who only uses the internet for basic online banking. For this profile, a $30 identity theft endorsement provides the exact administrative peace of mind needed to manage a breach. Compare that to the Smart Home Optimizer. This homeowner is heavily invested in smart thermostats, video doorbells, and connected appliances. Personal cyber insurance is mandatory here. A compromised network device could easily result in a ransomware attack, locking them out of their physical home. Accurately matching your insurance product to the technical complexity of your network prevents you from overpaying for useless coverage or leaving yourself exposed. For high net worth individuals or the children managing affairs for aging adults, the calculus changes again. As the data showed, the 60-plus demographic suffers the heaviest financial losses. This vulnerable group is targeted by highly coordinated wire fraud schemes. They require standalone personal cyber policies with million-dollar limits to combat these targeted attacks. Regardless of the policy you choose, the central trade-off remains. Identity theft and personal cyber insurance operate entirely after the fact. Cyber insurance is a reactive financial safety net, not a digital firewall. You buy the policy to protect your wallet, but you employ two-factor authentication and strong passwords to protect your peace of mind.